Hi, this is Steve O'Hare from PIA First, and I'm going to run through the US equities this morning. We're going to look at the Dow, the Nasdaq, and the S&Ps, and run through the different timeframes to give full color on what we're looking at from a short to medium term perspective. Highlight the main formations and support and resistance levels that we see moving forward. Now, equities across the globe are in a corrective sequence. We saw highs. We'll bring up the monthly chart of the Dow. We saw the high posted here in January, and prices have reacted lower from here. This is a common corrective sequence from an Elliott wave perspective, which is 5 waves. We see 2 waves that move with the trend and 2 corrective waves moving against the trend. These waves that move with the trend are impulsive waves, and we expect this correction lower to reach somewhere around the 38.2% Fibonacci retracement level before extending higher in the 5th and final wave before the larger correction. Now, from a candlestick perspective, also I'd like to highlight the hanging man candle. This is a very negative candle which commonly leads to further downside, which we've seen over the past couple of months. Now we'll drill down to the weekly chart, and here we're seeing a common AB equals CD correction. So this is targets a move lower towards this Ichimoku cloud on the weekly basis. So we still believe there's further downside to come before we see a correction higher, and we'll show you on the daily chart a little bit more of what's going on currently. So this bearish channel, we can see 2 tops, 2 bottoms, which forms this corrective channel lower, and this will face heavy resistance this week around 24,625. So we've got 150, 200 points on the to the upside before we see this resistance. Also, the daily Ichimoku cloud will form resistance. Also, we've got a 50% retracement level, which we can consider as well. That comes in at 24,860. So plenty of resistance on the daily chart. The 4-hour chart is forming an ending wedge formation, and with also we're looking at the MACD. This is an oscillator, and this is basically giving us a lower high, and along with price action moving higher, this forms a bearish divergence formation on the channel, so on the chart. So we're looking to sell into rallies and expect prices to react lower once the support properly breaks. So Nasdaq, have a look at that now. And the Nasdaq is similar to Dow in most aspects, apart from what we have seen. We've seen a higher low here. Now, looking at a potential formation, we can't get too carried away with this as yet, but we can see that after posting this almost bullish hammer type candle, this has been followed by a bullish engulfing candle. So further upside is expected, but this could be some sort of bull trap where sellers are waiting in the wings higher, and this could form the right shoulder of a head and shoulders formation, which is a serious bearish formation. So again, this would line up with our view of this corrective sequence that the equities are going through at this present time. From a this is a weekly chart, and we've just introduced some Fibonacci retracement levels. 67.40 would be a 50% retracement of the previous down move. 61.8 would be a normal corrective move, and that's coming in at 68.46. Again, plenty of room to move lower before the real support kicks in, which we could see down at 6,000 to 62,000. 6,200, sorry. Again, the daily chart can show why we're quite mixed at the moment. It seems to be hugging or reverting to this pivotal area around 6,700. So it seems to be bearish below here, bullish above, and this is highlighted very clearly by the Ichimoku cloud acting as a pivot. So when prices do break below it, we see an extension lower, and rallies are capped in that area. So a little bit of a sideways congestion from that perspective. But also there is a ending wedge formation, not quite as clear cut as the Dow formation, but again we're seeing that the bearish divergence with the oscillators moving lower while the prices are moving higher. So again, overall we see a potential upside to be short-lived before the bears come in again. Now the S&Ps have posted a trade idea on this last week for Orbex, and again we're seeing the similar sort of candles on the monthly chart. This hanging man candle, ideally it would have been above the high, but it still equates to the same type of price action. This was followed by further downside, and again we've seen further downside, although we've seen a small recovery in the last couple of days. On the weekly chart, we can see a descending triangle formation. Again, this is bearish. This was made up the trade idea previously posted, and we expect rallies to be capped around this above 2700, and the reaction lower to be the main trade idea. The daily chart highlights the reversal that we're seeing at the moment. Again, it didn't quite make a lower low, and we've got this reverse head and shoulders formation which targets a move towards 2740. So again, 61.8% Fibonacci retracement level, the downtrend level. This would be an ideal fading the rally scenario. And very quickly, a shorter term chart on this same formation. So we're looking for prices to move higher, but stall around the 2740, 2750 level before sellers come in again. Thanks for joining me. I hope you've enjoyed the presentation, and look forward to presenting more soon.